Good morning, good afternoon, good evening, wherever you are listening to me. Welcome to another episode of Wealth Building Conference. I'm your regular host, Oludare Fasola. Today, we're going to be talking about another important topics that is really giving us, medical professionals and business owners sleepless nights. So, I want to believe and I know that many of us know that in this part of the world, tax is number one biggest destroyers of wealth. So we're going to be looking at how medical professionals, business owners can really save on taxes, build wealth, and pass it on. All right. So, but before we go in, just so the way like we normally welcome ourselves, I want you to please type in the chat box where you are joining from and your name. Okay. Today's presentation is going to be interactive. I want to, if you have any question, please you can drop it on the chat box. We're going to look at your topic at the end of the day. So, and again, if you know medical professionals, business owners, or anybody that is looking into saving on taxes, all right, this will be an eye opener on how they can save on taxes. Once again, you're welcome to another episode of Wealth Building Conference. My name is Oludare Fasola. I'm going to quickly go into the presentation. So let me quickly pull up my slides. So today we're going to be talking about from high taxes to high legacy, how doctors and dentists can keep more of what they earn. From high taxes to high legacy, how doctors and dentists can keep more of what they earn. Now, and I want you to please put on the chat if you agree with me that tax is number one biggest destroyers of wealth. I want you to please type it on the chat box. If you agree, say yes. If you don't agree, say no, right? But one thing I want you to know is that is in this part of the world, and from my experience of working with medical professionals, one of their biggest problem, one of the biggest headache is how to save on taxes, right? Think about it. You pay taxes on virtually everything you do in this country. You pay tax on your grocery, you pay tax on your daily purchases, you pay tax on gas. You still make your income, right? You still pay tax on it. Your profit is still taxed. If you are not careful, even the one you want to pass on will still be taxed. Why? Because many of you know how to make so much money, but you don't know how to keep more of what you earn. And I've been saying this over and over again that your accountant cannot build wealth for you. If you agree, say yes, I agree. If you don't agree, say I disagree with you. But the fact still remains that if you are making so much money, your accountant cannot build wealth for you. So some of these strategies, what I'm be sharing today is something that even your accountant will not tell you. Even your accountant does not really know anything about it. But because of the fact that I've been working with a lot of medical professionals, help them to save on taxes, give me idea of what you are facing and what is the solutions. How can we help you? How can we keep more of what you earn? How can we still pass it on? Because why? After first, second generations, especially in Africa, among immigrants, okay, wealth disappear. Now, it is not that people don't want to, continue to keep generational wealth, because a lot of us don't know how to really, really keep more of what we earn. So today, we're going to look at how you can keep more of what you earn. Let's quickly start with important disclaimer. This presentation is for educational purposes only and does not constitute legal or tax advice. Please consult your accountant, lawyers, or licensed insurance agent advisors before you implement any strategies. I'm going to repeat myself. This presentation is for educational purposes only and does not constitute legal or tax advice. Please consult your accountant, lawyer, or licensed advisor, insurance agent before implementing any strategies. Let's look at it. I want you to look at this picture. This is a medical professional, having serious headache. Why does it feel like the harder you work, the more you give away? Now, I want to ask you this question again. Why does it feel like the harder you work, the more you give away? If you agree with me on this, like if you are an employee, okay, you're working and you are getting your salary, before you take it, maybe CRA take more, they take their taxes. I want to ask you, how much do you really pay on taxes? So that's exactly what happened to medical professionals. If you have six-figure income earner, on paper, right? Say if you have, on paper, you probably have about $100,000, but what comes to your bank account is roughly about $50,000. Why? Because the more you earn, the more tax you pay. Okay, and it is not your fault in the sense that you don't know how to save on taxes. The pain of high taxes. Canadian doctors and medical professionals and dentists often pay 40 to 54% of their income in taxes. So you save life, but CRA take half of your paycheck. Let me break it down. Now, if you are in corporation, okay, if you incorporate your tax, if you incorporate your practice, it's a smarter way of saving on taxes. But let me ask you again, how do you invest your retained earning? Okay, in your corporation, your tax probably be around 12 to 15%, depending on your province, depending on how much you make. Okay, but what about the profit you make after the CRA take their own cut? And you know what? The reality is this, right? If you don't really know how to manage your taxes, trust me, you cannot build wealth. If you agree, say yes, I agree. If you disagree with me, you can put it on the chat. I am not in any way saying you should not pay tax. Please don't get me wrong. But what I'm trying to say is that, right, you pay tax on daily basis on your purchases, right, on virtually everything. But so if you have a strategist of, at least save as much as you say legally on taxes, I think it's going to make sense. And I'm going to show you relevant tax code that back it up, because sometimes when you're talking to medical professionals, business owners, or anybody, they'll probably ask you that, is this possible? But I'm still going to be showing you the relevant tax code that back this up in Canada, right? So if you are living in another part of the world, let's say you're United States or United Kingdom, any part of the world, right? I want you to go back and study your relevant tax law in order for you to save on taxes. Sometimes we professionals, we leave everything for our accountant. Of course, your accountant job is to make sure that your books look very good in the eyes of CRA, like save you, put a lot of deductible expenses there. But sometimes they will not show you other strategies to save on taxes. And that's the reality. I've worked with medical professionals, dentists, business owners. One thing that I found out is that they make so much money, but they don't know how to save on taxes. They claim all the deductible, but what about the strategies? What about other strategies that you can use to save on taxes? They don't know that, right? So you could pay up to 54% on taxes, especially on passive income. If you are making profit from your corporation, you could pay up to 54%. So imagine that, right? You make $500,000 in a year, and of course, half of it is go to CRA. How does this sound to you? Look at this chart. Like, this is taxes, this is your take-home income. Now, imagine tax has taken half of your income. It is painful. I understand that it's painful, but look, I'm here and to help you to open your eyes to see how you can save on taxes. Marginal tax bracket in Canada, federal plus provincial rate can reach up to 53%. It's not how much you make, it's how much you keep. Like I've been repeating this over and over again. If you make so much money, but you don't know how to keep it, you cannot build wealth. Okay? You can't build wealth. Right? Imagine you make $500,000 in a year. 250,000 will go to taxes. Right? So let's quickly go further. The hidden wealth leak. These are the common mistakes I see most medical doctors and business owners make in Canada. Drawing full salary instead of dividend. Now, see, there are different, angles to this, and it all depends on your financial goal and what you really want. But the reality is that you have to do both salaries and dividend. So you have to do the mix of the two. And I will tell you that if you do the two, there are benefits, there are advantages of each of these. So you must leverage on the two. Now, not using corporations, right? A lot of you are using your personal account to do so many things, right? So you need to start leveraging on your corporation. No tax shelter planning. No, this is the thing, right? There's the difference between deductible expenses and strategies that you can leverage on to save on taxes. Let me repeat that. If it is good that you claim all the deductible, like all your errors and omission, your travel, your business expenses, your insurance, anything that relates to your medical practice that actually relate to how you make that money, the CRA allow you to claim it. Okay. But now, what about other strategies that you can leverage on that will help you to save on taxes? No tax shelter planning. So I'm going to talk about that as we proceed. Estate tax twice. So in this case, if you don't know how to save on taxes, how to plan for your estate, the CRA will tax your income plus probate, right? And it's a lot in this country. Look at this incorporation advantage. So if you incorporate your practice, right, the corporate tax is between 12 to 15%. If you agree, say I agree. The corporation tax rate is between 12 to 15%. Now, if you are drawing from your corporation, right, you could pay up to 53% on taxes. Okay, but doctors and dentists with professional corporation can, one, split income strategically, right, and retain earnings at lower tax rate and invest corporately for compounding. So now you can see the relevant tax code is Tax Act 125, small business deductions. You can just go and read more about that, right? So I'm just showing you that, because sometimes when you say it, we also need to back it up with law. What are the relevant tax sections of, that support these strategies, right? So it actually allows you to split income between your spouse, right? And of course, your retained earnings at lower tax rate. So if you make profit from your corporations, which retained earning is your income minus expenses, okay, equal income before tax, right? Less tax, like you pay 12% on taxes, you pay 13% on taxes, 15% on taxes, right? The profit is called retained earning. Now, how do you invest to retain earning? The tax you pay on your corporation is not a big deal, but the tax you pay on retained earning is much more higher than you pay on your corporation. And that is where you guys makes a lot of mistakes. You rely on your accountant to help you to plan your retained earning. It's not possible. Okay. So you need a wealth strategist advisor, insurance advisors that will help you to set up strategy, to put up a strategies in order for you to save on taxes. If you agree with me, say you agree with me. Because why? This is what I've been seeing on daily basis. People make so much money, but they don't know how to save on taxes. Invest corporately for compounding. One of the very smartest way to save on taxes is to invest in your corporation. can buy bonds, shares, because all these things is also subjected to taxes. But when it is on your corporations, it gives you a lot of rooms to pay lower tax bracket as opposed to personal income tax. Pay yourself smarter. We're going to be looking at salary benefit, and we're going to be looking at dividend benefit. Okay, so if you have a corporation, if you're a business owner, medical professional, dentist, gynecologist, surgeon, there are two ways to pay yourself. Okay, now number one, salary benefit. Create registered retirement savings plan contribution. So whatever you save on your salary will determine your contribution room. So you also have an opportunity of saving to RRSP. Okay, you also can build CPP benefit. Like I do say this, right? At least an average medical professional business owner must have at least 4 different strategies to plan for retirement. Do a little bit of CPP, pay yourself, do a little bit of CPP, okay, set up RSP, buy strategies. You also can invest on life insurance and of course real estate. At least you know that you don't want to put your egg in one basket. If one strategist is not performing enough, right, you can actually leverage on the other strategy. Deductible business expenses, all right? So like I said earlier, like all the expenses related to your corporation, you can also claim it. Okay, now dividend benefit, lower tax rate, as opposed to salary, right? You enjoy lower tax rate when you are doing dividend, no CPP premium required, tax efficient for certain income level. So it's always a way of reducing your tax bracket, depending on your income bracket, right? The optimal strategies often involve a mix of both for balance. So please, right, you need to do the two, right? And I know that you guys have amazing accountants that will advise you on the two. I've seen some medical professionals, they will tell you, so my accountant said I should just do only dividend. Your accountant is not really the best way. Do the two, because each of those strategies have its benefits, especially salary, right? You have RSP. They're going to also look at it, because whatever you take that is coming to your bank account every month can also build you up for kind of a line of credit and other credit facility. I want you to understand that, right? Because these are the things that you guys don't know when you are building wealth, right? Now, this is the tax law that support this is CRA tax 4036, professional income tax law. You can just go and read more about that. So I'm giving you this relevant tax law in order for you to know that this is something that is acceptable in Canada, in case your accountant did not tell you that. And because don't think that I'm here to just just teach or open your eyes to this. It is because I've seen a lot of medical professionals, they don't take advantage of this. I've seen some medical professionals, they say, my accountant said I'll just take salary alone. My accountant said I'll just take dividend alone, right? It is important that you learn and understand what you want to do. Now, the power of tax shelter growth, tax-free growth, cash value growth, tax-free inside the policy. So we're talking about life insurance strategies here, right? And you're going to see the relevant tax law, right? This is Income Tax Act of Section 148, subsection 1, that tax treatment of life insurance policy, in case you don't know this. See, I'm very, very passionate about helping medical professionals and business owners, immigrants, to save on taxes, because I've seen companies that are shut down because of taxes. If you are not careful, right, CRA can garnish your account, right? They can go after your income if you are not careful. So you got to be smart, right? You have to do everything you could to make sure that you save as much as possible on taxes. Tax-free growth, cash value growth, tax-free inside the policy, right? Access to capital through tax-free loans. I want to ask you this question. So which one is better for you, right? Is it to pay 5% on interest or pay 40% on taxes? Which one is better for you, right? You please put it on the chat. Which one do you want? Pay interest, pay 5% on interest, okay, on policy loan, or 40% on taxes? Which one do you prefer? Or pay up to 53% on taxes? Because I don't get it, right? When you explain this to them, they will be like, how does it really work? But I want you to sit down and ask yourself, right? It makes sense for me to pay 6%, 5% on interest than to pay 40, 50% on taxes. If you invest your retained earning, once you pass small business deduction, you are paying up to 53%. So will you rather pay 5% or you pay 53%? Put it on the comment chat. And I want to welcome your questions after this presentation so that, we educate ourselves on why we need to plan strategically, in order for us to build wealth, estate efficiency, debt benefit, bypass probate, and taxes. Now, I don't care whatever businesses you are doing. I don't know how much you are making, but if you are building wealth here in Canada and other parts of the world, you also need to ask yourself, the wealth I'm building, do I have a smart tax strategy that support that? If you have several houses, okay, bonds, even your RRSP is subject to tax. The question now is that, do you have strategies in place to mitigate those taxes? Right? You buy 10 houses, right? After 10 years, 20 years, you retired. The houses appreciate. Don't you know that they're going to tax the gains? You buy bonds, you buy REITs, you buy ETFs. Don't you know that they are going to tax the gains? Right? So you don't have any strategies in place to guide that. So I'm just, I just don't know, right, that people build wealth, but they don't put strategies in place to mitigate the taxes, right? So what I usually do with my medical professional is that we put strategies in place, all right? We also create a trust for them in such a way that even when they pass, okay, the family also have a bank that will continue to, pay the family education, buy cars, buy real estate, all of that, right? It is not only about estate planning, but about creating generational wealth. If you are making so much money, right, it's not only about saving on taxes, but how do you create multi-generational wealth? I want to ask you again, how did you create multi-generational wealth? I and my team, we have been helping a lot of medical professionals to do this, and I'm here to help you to do that. Protecting the practice and legacy. Key person and buy and sell insurance for incorporated practice. This is very common for those of you who are practicing and you have partners, right? So 3-4 medical professionals, you come together, and to start a medical practice, right? Now, if your equity on your corporation is probably 50-50, okay, is it not make sense for you to put up a buy and sell agreement on both A and B? Because why? The demise of one partner can affect the going concern of your clinic and your business. I'm going to repeat that, right? If you have an incorporation and the two of you are key person, okay, and your equity on that corporation is probably 50, 60%, 40%, depending, I don't care, right? Is it not make sense for you to buy and sell agreement on the shares of A on B and the share of B on A, in case A pass, right? They can pay whatever the equity so that it will not affect the going concern of that organization. Because if I have a medical practice, right, and I'm practicing with maybe I have another friend that we're doing it together, and something happened to me, probably as a result of anything can happen, life can happen, critical illness can happen. And my wife say, look, I want to get my money, like I want to get the stakes of my husband in that clinic. How will you get the money to do that? So it is very, very key that it's a smarter strategies that you put up a buy and sell agreement on that particular person. Okay. Now, disability and critical illness, safeguard income and practice. You are the only asset that you need to protect. if you are medical professionals, you are exchanging your time for income. If you don't go to clinic, you don't make money. I was speaking to a medical professional when I said, Mr. Fasola, if I don't go to a clinic 1 week, there could be a serious problem. Now, what now happened to you in case of disability, critical illness, right? So please, you need to put up a strong disability and a critical illness insurance to replace the income in case anything happens to you, right? You can see dentist disabled at 45, policy cover expenses plus preserved practice. This is a smart way of protecting your income. See, a lot of us feel that life insurance is until I die, but it's not about when you pass, right? That's what we call living benefit part of life insurance, which is what we're talking about here, right? It is not smart enough for you to put up a strategies in place to make sure that if anything happened to me or you that you are practicing, I have income that will be coming in to continue to sustain the clinic. Family trust and income splitting. The relevant tax laws in Income Tax Act of Section 74, subsection 1, and Section 74, 5, which is attribution law, attribution rules. This is tax on split income. Now, income distribution, split income with adult and children. So you can actually do this to save a lot on taxes. So that's what we call income splitting. And you can see the relevant tax law that supports that. So I'm just putting it here. It's a common sense that you also have a bit of understanding of what is happening, in Canada as per the tax law, right? Don't be a novice. At least try to learn, read. Okay. Of course, I know you guys are very, very busy, business owner, medical professionals. You are busy, but I mean, ask yourself, are you busy to the extent that you cannot take time to sit down with your advisors to build wealth? Honestly speaking, it makes sense that you do that. Corporate structure, hold shares of corporation for estate planning is a powerful strategy to save on taxes. Asset protection, protect asset from creditor. All this, once you do trust, and we have a trust lawyer like that understand how to help business owners and medical professionals to do a lot. So you don't need to stress yourself. And that is why we are quoting relevant tax law to back up what we're talking about today. Real work case study. This is Dr. Sarah, dentist in Ontario. Without planning, he earned $400,000, paid $200,000 in taxes. Imagine when we work with him, when we work with her, we actually reduce the tax bill by $60,000 annually. Okay, built 1.5 tax-free inside corporate insurance policy by retirement, and of course, leave 3 million plus legacy to the children tax-free. If you want to learn more, book one-on-one call with me. No pushing, no not to impress you, but just to show you how we help other medical professionals like you. If you agree, just type in the chat that you agree. From high taxes to high legacy. Now, number one, incorporation and tax deferral. Establish professional corporation structure. So not only your corporation, so also work with your accountant or your lawyer. You also need to have some form of what you call holding company. Okay, holding company is just a subsidiaries of your corporation, right? So you have a parent company, so you have another company that can help you to, do other form of businesses, because by law, you need to focus on your medical practices, your real estate, your bonds, your REIT, your ETFs, and other type of investment. The holding company can do that. So a typical medical doctors must have two corporations. Your main corporation that you use for your medical practices, and your holding code that you use for other type of business. Salary plus dividend optimization. We have now summarized what we've been learning so far. Create the ideal compensation mix depending on your financial goals, depending on what you really want. Okay, I would advise do the mix of it. Do a little bit of salary, do a little bit of dividend. Corporate owned life insurance, build tax sheltered wealth, right? One powerful strategies to save money on taxes. There are two ways to do this. Is that you set it on the corporation or you set it on the holding company. I'm going to explain that. So if you set it on the corporation, so there's, you are saving you're setting up on the corporation before tax dollars. So meaning that whatever premium you are paying from your corporation, right, is going to be taxed at the end of the year. There's what we call add back. So when you save, when you put the money, let's say for example, you save $60,000, $50,000 into a corporate life insurance policy. Okay, at the end of the year, all right, the accountant will have to tax, because by law, life insurance is not tax deductible. If they don't tell you that, I'm telling you today, life insurance is not tax deductible. Okay, now, so whatever you save on the corporate life insurance will be taxed at a corporate tax level. And you want to ask, so if I want to pay tax on my life insurance, how does it reduce my tax? This is how you reduce your tax. If you are saving, if you are setting it up for your corporation, right? So because the corporation pay maybe around 12 to 15% on taxes, so the premium is going to be taxed at that particular rate as well, right? So let's say, for example, you put $50,000 there, right? Multiply by 12%, 13%, as opposed to 40%, right? Because why? If you don't put that money on life insurance, is that you withdraw that money, maybe, right? You pay salary or you take dividend, right? And the tax on those is much more higher than to pay it on the corporation. The reality is it, if you are making money on your corporation, is that you pay the tax on your corporation, you pay it elsewhere. If you don't pay it on your corporation, you pay it as a form of salary or you pay it as a form of dividend. There's no free money in this country. That's the reality. So you need to sit down and ask yourself, where do I want to pay my taxes? Do I want to pay it on your corporation, or I want to pay it on dividend or salary? You need to choose one. But the smartest, the best way to save on taxes is to pay it on your corporation, because you are paying, you're on salary, you're paying around 40%. Even on dividend too, you probably pay up to 40% on taxes as well. So which one will you want to? Do you want to pay 12% or 40% or 30%? No, okay, you decided to do bonds, stocks, REIT, and all of that. You also pay tax on the gains, which is much more higher than you pay it on the corporation. So that is the first strategy, that is you save, you set up the corporate whole life insurance on your corporation, the premium enjoy lower tax bracket. The other one is what you call after tax dollars, which is retained earnings. So on your retained earnings, whatever you profit, whatever you make as profit at the end of the year, right? So the CRA will still have to tax it, because once you invest your retained earning, whatever profit you make on it, you're going to pay the taxes. But here are the smarter strategies. You can set up what we call immediate finance arrangement, right? You put the money on immediate finance arrangement, tax-free, right? The money grow tax deferred, right? You borrow immediately, you put the money, let's say the second year, you start assessing the money. You put $1 million in, you take $1 million out to do whatever you want to do, right? So instead of you to pay 53% on taxes, pay 5% on interest, because if you borrow back the premium, you are paying 5%, you're paying 4%. Guys, be smart. That's like, be smart, right? Family trust plus estate planning, protect and transfer wealth efficiently. Now, there's one thing to make money. It's also another thing to save on taxes. What about pass it on, right? You want to make sure that you create a lot of, generational wealth for your family, right? I've seen many medical professionals, business owners, surgeons, dentists. They make so much money after 1, 2, 3 years of practice. The money disappear. Why? Because there is no proper estate plan in place. So what I and my team used to do is to set up an estate planning for you guys, to make sure that not only we're going to help you to save on taxes, but we're also happy to pass it on to a generation. Summary and call to action. Doctors and dentists don't just build practice, right? They build legacy. Smart planning. Smart planning means keeping more of what you earn and pass it on, right? This is the key takeaway here, right? With proper planning, you can significantly reduce your tax burden and build lasting wealth. Let me repeat myself. With proper planning, you can significantly reduce your taxes burden and build lasting wealth. I have seen that in many cases. Sometimes I've seen many medical professional business owners. I say, Mr. Fasola, I make so much money, but I don't see the money. I say, well, you don't see the money because a lot of your money, if you go and check what you pay to CRA, right? Some of us are even taking money from the corporation. By the end of the year, by the time you see what is in your shareholders fund, it's crazy. Like, and whatever you have there, you have to pay the tax. Here is the thing, right? Forget about it. If you make money in this country, you have to pay the tax. And you have two options to pay the tax. Is that you pay the tax on your corporation, or you pay it on the other side, which is either by taking salary or dividend. Now, let me give you these strategies. Set up a bank, right? Set up a bank for yourself, right? And turn that bank to a wealth building strategist. So, meaning that, right, you have a strategist that will allow you to have your own bank instead of you to go to RBC, instead of you to go TD Bank, right? You set up the strategies, okay? You turn that one to your bank. I believe you all know what a Rockefeller strategist, right? The waterfall strategies that, it built for the family. Until today, okay, Rockefeller is one of the wealthiest, human being we have in this world. Very smart, right? What he said was, I want to make sure that every Rockefeller family will never think about money. Until today, they still have that bank. Create your own bank. I've created my own bank. What about you? So if you want to create your own bank, right, you can reach out to me after this call. You can you can follow me on all my handle on social media, on Instagram, on my Facebook, on YouTube. And I'm going to also share my QR code after this presentation. Let me close with this. Legacy is not what you leave to people, but what you leave in them and for them. Wow, this is very powerful. Legacy is not what you leave to people, but what you leave in them and for them. Thank you so much for listening. I really want to appreciate everyone for joining these amazing presentations today. I want to know if you have any question, please, on the chat box so that we can quickly look into that, right? If you have any question here, I want you to put in the chat box. If you have any question, please put in the chat box. Okay. All right. Let me quickly share this with you. So if you really want to save, if you want to book a one-on-one consultation call with me, right, and you want to learn more about how to save on taxes and how to build wealth, right, I will just encourage you to just scan this QR code and book a call with me. 1 second. Oh, okay. Wow, my QR code is not. I'm going to share that next week. All right. So on that note, we're going to bring this meeting to an end. Next week is another meeting that we're going to be talking about how insurance agents and business owners. So if you are into sales, right, please join me next week for another important, presentation. I'll be sharing on how insurance agent, real estate agent, mortgage, if you are selling coaches, can scale. A lot of us are afraid of selling. I love selling, right? And the reason why many people are afraid of selling is because they just want to sell. I'm not here to sell to anybody. What I want to do is to educate people, show them the value, right? People buy value. And you can only add value to people's life if yourself don't have enough value. So the value you possess, the value you have is also, depending on the value you're going to have to people's lives. So, and that is what I'm trying to do today. So on this note, I'm going to bring this meeting to an end. Thank you so much, everyone that joined me today for another episode of Wealth Building Conference. Next week is another week. We're going to be looking at another topic on medical professions, on how to build wealth, insurance agent, and how to scale. Once again, bye for now. Enjoy your weekend. See you next week.